These are the key statistics so far this year, direct from estate agents on the front line. And just looking at these figures might cause you to draw conclusions already. A 6% drop in properties valued, 16% drop in registered buyers, and on the letting side, a 7% increase in the number of people looking for homes to rent. But why, despite this, do house prices continue to rise? Well, in this video, I show you, and I've broken the data into 5 key parts, so you can decide for yourself if property prices are going to keep rising or are due a crash. Those parts are 1, the economic outlook, 2, UK house prices, 3, buyer demand, 4, the volume of property selling, and finally 5, the seller supply. From watching this, you will get a complete picture of exactly what is happening in the property market right now, rather than just looking at the headlines as gospel. And at the end of the video, I'll even share a simple tip to help protect you, even if the worst did happen and house prices crashed. And just in case you're wondering why the hell you should listen to me, my name's William Gale, and I've spent my time since 2013 building a UK-wide home buying company, British Home Buyers, a nationwide estate agency, British Home Sellers, and my own personal property portfolio. So not only does that give me information that you perhaps won't have access to, but reading the market correctly is essential to mine and my clients' success. So let's get into it. Section 1, the economic outlook. As we all know, the Bank of England interest rate is still sky high. It might have just been reduced slightly recently, but in reality, it is still enormously higher than the last decade. It's almost astonishing to see house prices haven't dropped if all you looked at is just how high interest rates have been increasing over the last few years. But as we all know, the whole reason interest rates have been so high is to bring inflation back under control. And it is reassuring to see inflation has continued to drop, which has ultimately led to interest rates slightly decreasing, which hopefully will continue to decrease, continue to happen over the next year or so. But the other thing about inflation it has actually hidden a property market crash we've all experienced over the last few years without us really even realizing it. Because here is a graph that shows house prices adjusted for inflation over the last few years. And in fact, adjusted for inflation, house prices have dropped 16%. If you compare that to the 07-08 property market crash, adjusted for inflation, we saw a 20% drop in house prices back then. So not a huge difference. But look, in general, our focus, people's focus on house prices is unadjusted for inflation. The most important thing right now is that inflation is coming back under control, and as interest rates ease, borrowing money will get less and less expensive. That's important because, as we can see, although GDP has remained static more recently, it is generally in an upward trajectory. All this before we've started to see the real effects of interest rates beginning to drop slightly, which in theory should help the whole economy grow. So when you look at this, interest rates on the way down, GDP on an upward path, it certainly paints the picture that the worst is behind us, and hopefully we're entering a market cycle of growth. But how has this been affecting house prices? Section 2, UK house prices. Well, they've been continuing to rise, and it is quite clear that given the economic environment is beginning to improve, that it's likely they'll keep rising, especially when you remove the element of high inflation, which is a big part of what has stopped real house prices visibly dropping as much. And when you break this data down by country, interestingly, we have been seeing price rises across all 4 countries in the United Kingdom, which if you contrast to these same figures back at the very start of this year, just wasn't the case. It was only Scotland and Northern Ireland showing growth, with England and Wales suffering. But right now, we are clearly starting to see growth in prices even out across the UK, most notably with Northern Ireland and Scotland prices slowing a little but still growing, and England and Wales drastically catching up. But look, we can look at what house prices have been doing all day long, but there is ultimately a big lag between this data and the reality, because a sale my estate agency will secure today, for instance, won't complete till 1, 2, 3 months into the future. And then the land registry itself takes another 1 or 2 months to update. So all this so-called sort of current data is in reality 6 months out of date anyway. To read into the future more clearly, we need to start looking at buyer demand. Section 3, buyer demand. So personally, this is where I think the data gets more interesting. We're actually seeing the number of buyer registrations dropping slightly, although it is still tracking ahead of Jan and Feb. And this is matching up to the volume of viewings being booked, with that also starting to decrease a little as well. So with this, you look at the volume of buyers registering dropping, you look at viewings dropping, and it would be very, very sensible to assume the volume of sales being agreed is also going to start dropping. But you'd be wrong. Section 4, volume of property selling. The number of sales being agreed has actually been increasing, which I know is going to sound completely counterintuitive, but let me share my insights, given I actually own a nationwide estate agency, British Home Sellers, that deals with about £600 million of property a year. We're seeing buyers become more decisive in making decisions, whereas before there was so much uncertainty over what the future held. You had a lot of people viewing property, but then wanted to wait or needed to view more properties before centering on a decision on what to buy. Whereas now there is clearly more optimism and the assumption that the worst of inflation is behind us, that the worst of interest rates are behind us. And so we're seeing this big uptick in buyers actually making decisions to purchase. And we're also starting to see this in the mortgage data. Yes, mortgage advances have decreased slightly, but the key figure to look at is that yellow line, which represents new commitments. The green bars are mortgage advances, so the actual amount buyers have physically borrowed. However, new commitments are the amounts that a lender has agreed to lend buyers whilst they're going through the process of actually buying their new home. So you can see the fact that is growing matches up to the fact more buyers are starting to make decisions to actually purchase. So in reality, all the uptick in activity we're experiencing now is actually what you're going to be reading about in the house price data in 6 months' time, because of that lag between a sale being agreed today and that data hitting the land registry and then the news 6 months later. So we can see demand is increasing. Well, what is happening to the supply of property? Because if we get a bigger increase in supply, that could in theory offset the increase in demand. Section 5, seller supply. Well, supply has been dropping ever so slightly, but you can see it is still higher than the same periods over the last 2 years. So when you look at overall stock levels of property on the market, it is clear the volume of property on the market is growing and growing fast. It's over double where it was 2 years ago. So in a way, as demand increases, it's yet to be seen if the increase in overall supply offsets that, and we're in fact entering a future where prices stay relatively flat, perhaps growing slightly, but still increasing behind the level of inflation, exactly what we've been experiencing over the last few years. Especially when you look at the mortgage arrear data, it is clear that more and more households are finding it hard to keep up with mortgage repayments, which is likely going to force even more property coming onto the market in the upcoming months. So look, I'm hoping that me walking you through all the data helps you make a decision for yourself, and if you think house prices will crash or continue to increase, to start a debate in the comments below. My view is that economically we are heading towards clearer waters, so it's likely house prices will continue to rise, but that the government and Bank of England will be keen to make sure they don't rapidly increase again. Especially with Labour's plans to build 1.5 million new homes, I imagine the goal is for house prices to see no more than low single-digit growth, 1, 2, 3, 4% growth, but I highly doubt the market will crash. Nonetheless, There is no harm in protecting yourself in case I'm wrong. Section 2, a tip to protect yourself from a market crash. The best tip I can give you is to make sure you understand the difference between an asking price and the market value. As you can see, only about 25% of properties sell at the asking price or above. Staggeringly, about 75% of property actually sells below the asking price. So when buying property, make sure you don't overpay, and even better, try and source property at below market value if you can. I'll see you in the next video up here.